Guys, yesterday I put out a video on Financial Education 2 talking about if we are in a stock market bubble, and I went through a ton of facts in the course of that video, a ton of statistics, exactly what we're looking at, and I came to the conclusion that, in my opinion, based upon all the facts, we are in a very overvalued stock market right now, speaking in general terms. It does not mean every single stock in the stock market is overvalued. Let me be very clear about that. But in a general sense, we are significantly overvalued in the stock market, in my personal opinion, right now, okay? The market's up big again today, okay? Up another 357 points, just as prepping this video, and I think it ended actually up even higher than that by the time I was done prepping this video, okay? The stock market is flat out overvalued right now, in my personal opinion, okay? So the question is, what is next? And that's what we're going to get into this video. Do we have a stock market collapse coming? Do we have like this do nada market where the market just doesn't really do much of anything for like, let's say a 1, 2, maybe even a 3-year span? Or do we have a situation where it continues to go up and up and up? And do we get to a place where we actually end up in a stock market bubble, which is exactly where we don't want to be? Trust me, that is no fun, okay? And now let me address one thing before I even get into this video, okay? Anytime I even remotely suggest the possibility of the stock market being overvalued or speak in any type of negative tone toward the stock market and valuations and things like that, okay? 5% of the viewers out there, I see the comments, like 5% of them be like, you're just a hater of stocks or something like that. And I understand a lot of people don't like watch my videos religiously. Like, there's definitely some folks out there that don't watch every single video out there, okay? But let me just be very clear, okay? If there's a person that benefits massively from the stock market going up and up and up and up, it is the guy that is recording this video right now, okay? Yesterday, for instance, when I was recording that video yesterday, the public account, one of 7 of my stock market accounts, was up $13,123. Yesterday, I easily made, I don't know, $30, $40, maybe $50,000, okay? Probably even more than that. Here today, as I'm prepping this video, just one of my stock market accounts is up $3,382. So add up all the other accounts and it's easily another 5-figure day from the stock market, okay? So needless to say, I'm kind of like benefiting big time from the stock market going up and up and up. I'm not just like some hater that just wants to talk negative about stocks. Like, I have the majority of my wealth in stocks, okay? So, go back to wherever you came from on that little bus, okay? At the end of the day, I have a massive personal brand that I have to care about. I got this channel, I got the second channel, right? I have my IG with, 57,000 followers on there. At the end of the day, why do so many people follow me and like my content? Because I speak the truth, and whatever my truth is, I speak it out there. Whether I feel like this stock over here is a great deal, whether I feel like this stock's not a good deal, I will speak on it. Whether I feel like the stock market is a great deal or an overvalued price, I will speak my truth. And that's how you truly build a great personal brand. And I will always speak my truth, because at the end of the day, the most valuable asset I have personally, you take away the stocks, you take away all the real estate I own, you take away everything, the cars, everything, okay? At the end of the day, the most valuable asset I have is my personal brand, and I will always speak what I feel is my truth, and that's the bottom line with that. And if you can't deal with it, go. Go. I'll wait for you to leave. Okay, peace, okay? Now for everybody sticking around, let's start getting into this. So by the way, just as I prep those few slides, look at the market now. The market now is at 423 points, okay? S&P 500 now is up 1.13%, Nasdaq now up 0.53%. It just keeps going up literally as I make this video and as I prep it. It's absolutely crazy, okay? So let's talk. A collapse situation, a do nada situation, I'll keep going up. And I want to talk about that bottom one first, then we'll get to the other two. Let's talk about if a scenario is realistic where this market continues to go up and up. So first off, a lot of people feel like, well, you can't be overvalued. You can't, be approaching any type of stock market bubble if you're not at a new high, which technically, if you look at the Dow Jones Industrial Average, S&P 500, and the Nasdaq, we're not technically at a new all-time high right now. And so for that reason, some people are saying, well, you can't really be overvalued if you're not at a new high. Well, keep in mind, we've just gone through a once in 100-year event that has devastated unemployment rates, that has devastated GDP, that has devastated corporate profits, has put massive companies into bankruptcy and tons of other companies into very hard financial hardship, right? We're going through a once in 100-year event. So the fact is, if you're anywhere remotely close to your all-time high in a once in 100-year event, that can definitely mean you're probably pretty dang close to overvalued territory, okay? Now, in terms of thinking, can this go on for longer? Let's go ahead and look back at the Nasdaq, okay? I want to look at it at a period from basically about 1996 to about 2004, okay? And here's what you're going to find. You could have started to make a very strong argument that we were starting to reach a bubble territory, or at least a very overvalued Nasdaq. Back in 1998, you could start making that case out there. You could start, putting those points out there, okay? Meanwhile, the stock market kept going up for the next 1 to 2 years after you could start making those initial claims of, we're starting to get into bubble territory or very overvalued. Literally 1 to 2 years it took for the market to keep going up, okay? And then from the time where basically the market peaked until the time when the market finally bottomed, it was like a 3-4 year span, okay? And keep this in mind. From the time where you could have started making a strong case for the Nasdaq being overvalued back in 98, it took all the way, 4 or 5 years before the Nasdaq got undervalued again. I think this is really important to, pay attention to. If you just think like the market can't keep going up, the market can keep going up just flat out, even if the market's overvalued, even if the market gets into a bubble. Literally, the stock market can still keep going up for, sometimes months at a time, sometimes a year, even 2 years, but eventually, and the bigger the bubble is, eventually it does end, okay? That's just the fact. And the last thing we want is any type of true bubble in the stock market, because look at this, okay? It took 15 years for the Nasdaq to get back to its peak where it was basically around like I think it was March of 2000 or 99 or sometime around then, right? 15 years, that is incredible. And that is the last thing we ever want to see in the stock market. We don't want to go through a 15-year span where, it takes the market to get back to that place. That's just wrong. And that is a clear sign that there was a massive bubble going on in the market when it takes 15 years to get that asset price back to where it was and to finally go up from there, okay? That's not what we want to see in the stock market, okay? And this is the reason why I can't short stocks. People say, well, if you feel the stock market's getting to an overvalued place, why don't you just start shorting stocks like crazy? I can't short stocks, man. What am I going to do? Short a bunch of stocks and then, get absolutely destroyed because the market keeps going up? I mean, you don't know when this is going to end, just flat out. Just because the market's overvalued doesn't mean I can go out there and short a bunch of stocks. Here's a great saying, okay? Warren Buffett said this a few times, and I don't think he's the one that originated this particular comment, but it's a great saying. Markets can remain irrational longer than you can remain solvent, essentially meaning that, man, you could go ahead and short something, you could bet against something in the stock market, a stock or whatever, but just because you do that, it could keep going up and up and up. And even if the price gets sillier and sillier and sillier, it doesn't mean people won't continue to pay for it out there, okay? And then there's this other saying, which is essentially you can't fight the Fed. I know I've seen that in a lot of comments, and that was something I brought out to people before people even started making that expression popular. I said that a few months ago to people in the private group. I was like, guys, this is why shorting stocks, buying put options is such a hard game to win, because you have the Federal Reserve there, you have the US government, which puts pressure on them, and essentially they say do this, they do that. You put it, they want to buy $1 trillion worth of assets, $2 trillion worth of assets, 3 trillion, 4 trillion. It doesn't matter. It's like unlimited ammo, and it's so dangerous. And so it's kind of true. You can't fight the Fed. And so that's why shorting just doesn't make sense. Look at the Fed's balance sheet. It's over 7 trillion now. It is over 7 trillion now. They have increased their balance sheet by, over $3 trillion just very recently. And here's the worst part. It's not even like stopping. It's still climbing. Those numbers are still climbing. It's not like, oh, it's done or something. The numbers are still climbing. And the Federal Reserve, and really the US government, let me be very clear about this, okay? Because it's the US government that puts pressure on the Federal Reserve to do certain things. So many people want to point at the Fed. It's like, no. Point at the people you guys elected in office across the board, because all those people are the ones that keep putting pressure on the Fed to go ahead and, do this, do that, do this, do that, okay? No, the Fed's not deciding anything. Let's be very clear. It's the U.S. government and governments around the world that are truly deciding what goes on at the Fed. Let's be very clear about that. And if you don't believe that, then, you're just sleeping in a different time zone, okay? Let's put it that way, okay? The Fed might be creating an asset bubble, okay? An asset bubble, and that could get ugly, and that's not something we want, okay? That's a no bueno situation. And just keep in mind, the bigger they are, the harder they fall. It's a great saying, right? And at the end of the day, please, I do not want this type of situation to happen to us where we get into a massive bubble in the stock market where valuations just don't add up, where forward Ps are at ridiculous levels, and it's so unsustainable that we end up in just an ugly situation, guys. We've got to really see what happens here with the economy, how it opens, how does unemployment come down, how long does it take for it to come down, GDP to get back on the right track, how many bankruptcies are we really looking at for big companies, small companies, mid-sized companies, all these things. It has to play out. We have to see what happens here. And the market's just running like insane ahead of all this. And it's like, we don't even know how this is going to shake out. This is a once in 100-year event we're going through, okay? So, could it keep going up? It's possible. Let's talk about the next situation, which is the stock market being in a do nada situation. Let me be very clear what a do nada situation is, okay? This means essentially the market goes nowhere for like a 1 to 3 year span. Essentially meaning the stock market goes up, down, it's volatile, up, down, up, down, up, down. But essentially, at the end of the day, it doesn't really go anywhere for a 1 to 3 year span, okay? And so this is a very professional chart I wrote out for you guys here. But you look at this stock chart, right? And let's say that's over a 2 year span, a 3 year span. Yeah, it has some ups, it has some downs, it has some ups, it has some downs, blah, blah, blah. And it still ends up at pretty much the same place it was, okay? And this, in my opinion, is kind of the most realistic scenario I see for the stock market currently, where essentially we just end up in a market for the next 1, 2, maybe 3 years where it's volatile, it goes up, it goes down, it goes up, it goes down, it's bad news, it's good news, and we get into that type of environment. But then you look back in 2 years or 3 years from now, and it's like, well, the market's really not any different than it was, and we've gone through periods like this. You go back to 2014, S&P 500s, approaching 2100, then 2016, 2 years go by, and the Nasdaq hadn't really gone up that much. It was still like 2100, like under 2200 in 2016. And so you have this volatility between 2014 and 2016, and not really much happened in the market. And there were no major recessions that happened during that time or anything like that. It was just, volatility and a whole lot of nothing for about a 2 year span in the stock market, okay? And that's definitely very, very possible. So if we were to look back, let's say a year from now, 2 years from now, 3 years from now, we could very much be looking at, indexes that are somewhat similar to where they're at, okay? We can go through a period where this market keeps going up, and then it drops, and then it goes up again, and then it drops again, and then it goes up again, and then it drops again. But at the end of the day, 1, 2, 3 years from now, we could be looking at a stock market that's very similar to where it is, which is another reason why it pays to be an individual stock picker at the end of the day, because you're able to find the best opportunities. Because regardless if the stock market is around here in 1, 2, 3 years, there's going to be some great companies that continue to grow their business. It will not be all of them, I can guarantee you that, but there will definitely be some companies that grow their businesses substantially, increase revenues dramatically, increase profits over the next 1, 2, 3 years, and those companies will be rewarded handsomely. Meanwhile, a lot of these other stocks out there are not going to be in the best positions. I don't know if you guys ever watched some old school football from like the 1930s, right? The old school football, there's a whole lot of movement, guys smashing into each other. There's not much happening, man. There's no like long runs or long passes. It's just a big, bunch of cloud of dust at the end of the day. And that's the type of situation sometimes you can get in the stock market. And this is very much a realistic possibility in my personal opinion, okay? Let's talk about the collapse scenario. What are the chances the stock market could collapse? We could go back down to where we were in March, which was essentially Dow 18K, S&P 500 was around 2200, right? Nasdaq fell into 6,000 range. What are the chances we could have a stock market collapse back down to those levels, or let's say even lower levels, okay? Well, first off, we have to be honest with ourselves. Let's be very honest. If it was not for that Fed backstop and bailing out essentially the stock market, we would have gone down a lot more than the stock market actually went down, okay? Nasdaq probably would have went down to 5,000 range and maybe even 4,000 range if the Fed had not stepped in such a massive way with just buying trillions of dollars of assets. And it's not just about the fact that we would have went down even further. The fact is, we would have went down for a longer period of time. I mean, when you look at how short the time period was when we fell big, right? It was about a 3 to 4 week span, which is ridiculous, right? You go through a once in a 100-year event, and all you go down for, in a big way at least, is for like a 3-week span, essentially. That's ridiculous. It would have been way longer had the Fed not stepped in. Let's be very clear about that. We would have been, having a down market, where you could have bought assets for good prices for at least 6 months, 12 months, maybe even 18 or 24 months. But here you had your one little opportunity for like a 2-3 week span. It was ridiculous, okay? And, this is the least free market ever. Let's be very clear about that. We've never had, in my opinion, the least free market as we do today. And that's just facts, okay? And so at the end of the day, the Fed might not even let the stock market go down big again. That's the craziest thing with this all. Not be allowed to go down in any massive way for any extended period of time because the Fed might just bail them out. The U.S. government might just, put pressure on the Fed and do the Fed do this, do that. And the Fed might just end up having to never let the stock market go down for any extended period of time, which is just crazy. Because, I mean, imagine you got this guy here, okay? Imagine he says, man, I don't want to ever have any short-term pain, which, short-term pain is anytime the stock market goes down big in a real way for an extended period of time, right? That's short-term pain. So this guy says, I don't want to ever have any short-term pain, so run. I'm never going to do any type of physical activity. I'm just going to, sit on the couch and lay in bed all day, every day, because I don't want to get tired at all. I don't want any type of short-term pain, okay? So over time, obviously, he gets really overweight. He has a ton of health situations, right? And he creates a huge long-term problems because he doesn't want to go through any short-term pain. Because the short-term pain is just, it's too tough to go through, okay? And so he creates this long-term massive problem. And, this is kind of what I feel like is going on right now. So government, once again, everybody wants to point at the Fed. The U.S. government might never allow this to happen again. Let's just be very honest, because look at what happened. The stock market dips. The stock market truly dips for, a couple weeks span, and they just put, the Fed behind them to buy everything in sight, to backstop everything in sight. And, it's craziness at the end of the day, and it could be creating some real long-term problems out there. And let's just say for a moment, you, me, and everybody else, we all decide to go ahead and, sell our stocks tomorrow. I'm not even sure the stock market would go down. I mean, the Fed might just buy everything up. This is crazy, okay? This is why, the stock market is so fishy right now, okay? Stock market is so fishy right now because we've seen a lot of the most famous investors, right, out there pretty much looking at the stock market as not attractive right now, right? Warren Buffett, the Oracle of Omaha, one of the greatest investors ever, he doesn't want to put money in the market right now in any way, especially in any substantial way, but really at all. Don't you think that's a little concerning? Like maybe a little bit concerning, right? Somebody that's perma bullish, Warren Buffett, 140 billion on the sideline, doesn't really want to put money in the market. Do you think that's a little concerning? Do you think it's also a little concerning that the fact is that in terms of billionaires' dollar share of the stock market right now, it's the lowest it's been in any time in recent history, but yet retail investors right now own the biggest share of stocks in the history? Don't you think that's a little like fishy? Don't you think that's a little concerning out there? So if you're thinking about what is the next play with the stock market, as much as I would love to believe that it is possible for the stock market to fall in a major way and for, an extended period of time, it's hard to believe. It is really hard to believe because I'm just not sure it would even be allowed to happen, which is crazy. And so if anybody thinks we're truly living in a free market economy, we're living in, anything really but a free market economy at this point in time. And I understand nobody wants to go through short-term pain and nobody wants to wake up tomorrow and see their stock market account down 20, 30, 40%. I understand that. But sometimes that is what you need to have some real great long-term gain in this game. And just we aren't being allowed to have that type of environment anymore. And so that takes the whole stock market collapse potentially off the table for any extended period of time, because these guys, which is the, essentially, let's just call them the government, okay? They're supposed to be, separate entities, but essentially those guys are the government. Guys, I don't know what to tell you. Like, a stock market collapse, it might not just be allowed to come. Let's be very, very clear about that. And it's just so fishy because, the big guys aren't really buying. And so at the end of the day, you got to ask yourself, who is buying? Like who, the stock market, I think, ended, by the time I was done, prepping this video. I think the stock market, I think the Dow was up 500 and something points. I think it was up like 530 points or something like that, somewhere around there roughly. Who was buying? Who's really buying today? Whether that sent the Dow up 530 points. Because I can tell you, to get the Dow to go up 530 points, there needs to be ridiculous amounts of money put into the market to make a move like that happen. And so who's really doing that? Who's really doing that? Who's pushing the Nasdaq up to almost all-time highs now? Who's pushing the S&P 500 to within what now, 300 points of an all-time high after, this massive gauntlet of bad news we've gotten without, very much good news at all? Like who's really doing this? Because it's ridiculous sums of money to make this happen. There has to be so much buying pressure on the market to make a move like that happen. Like who is doing it? Because most of the big investors aren't doing it. And so most of the big investors that could actually move this market aren't doing it. Who's doing it? Just let that sink in for a minute, okay? So anyways, hope you guys enjoyed today's video. As always, make sure you smash the thumbs up button. Leave me your opinion in the comments section. Thank you for watching and have a great day.